Hello everyone, welcome back to my YouTube channel. And today I'm going to be looking at a different thing altogether. It's not going to be analysis. I'm just going to explain something one of you requested, and I think it's a great pleasure to access such a question. When I started trading, actually, when I started trading other blocks, sometimes I do miss a lot of trades, and I do not understand. And there was a hidden feature, or there was something very hidden that I really did not see. All the time, I just look for other block only, and then I wait for the market, and I'm waiting for the market to come back and tap into it, and then I take my position maybe to the downside or something else. So, but I was asked what is a breaker block, and I just want to explain that really quick. Okay, so a breaker block is essentially a move that happens in this way. Okay, you can see that um, after the market has finished its accumulation and then taking out all those traders, probably trying to placing their buy stops and their sell stop losses, okay, around this area after the liquidity has been taken, before the liquidity has been taken. You can see the market was really, like they were buying, selling. Then you can see it just made a small move, okay, but very strong to the downside. Then came back, breaking the whole structure. You can see, so from here, you see this as a different thing altogether. But what you not see is that, so if it was in a pattern, you see we have a move like this, then you probably draw your line here, okay? And we call this a hover, okay? In the Falcon strategy, we call this a hover. So you see the price, you see the price will hover around this area and then push up. But instead of actually going further, it returns back to the structure and breaks the previous low of that particular structure. And now you're looking for price to return. Now you'll be looking at your order block to be around this area. Now let's not look at this because this has a mixed green candle that's actually became the order block of the area, and you might take you are able to take advantage of the breaker block that is inside of here. But in this case, you might not see any other thing inside. But what you just see is the market, you know, you'll be like, oh, the market has a strong push to the downside. I now want the market to come back, filling my order block and take me all the way to the downside. But there is always a hidden pattern that is always in the ICT or the smart money concepts that you might miss. Okay, because anytime this is found, you have to be careful. My advice for those who want to treat this type of patterns is just wait and go to the lower time frames, like the 1 minute, 5 minutes, to be able to get these entries. And getting these entries are super simple, but sometimes they're risky at some point. So my advice, just if you just think you can't trade it, just stay away from it, because it's safer to protect your money than to go into something you don't know about and then later on regret for losing your money and probably thinking it might hold and it might not hold. In the future, you'll be blaming yourself for actually, taking such a decision in probably thinking you are a pro trader and you are trying to make off some coins for yourself, and it might not work out for you. And probably the savings you made to actually use to trade was not actually, let me say, your only money, but you borrowed others' money. And I would advise you to stay away from these things if you don't know how to trade them and if you are afraid to trade them. Trade what you know and don't trade what you don't know. What you have learned, the patterns you know, follow that one. Those you don't know, when you see the pattern confusing, like something, a structure like this, if you see this very confusing for you, just leave it and go. There are other patterns, there are million patterns that are inside this market that actually works. And I think you shouldn't be stressing yourself over one thing that might not even give you any advantage or probably something. So you can see this particular one, right? So the breaker block, as I said, is just a structure that's actually is a strong zone of resistance or maybe support if that is in a bullish trend. Okay, that actually occur to be able to hold, probably to take the next position, okay, to be able to hold. That is a secret pattern of the banks that they don't want you to know. So that breaker, that um, that person, ICT has called it the breaker block. I mostly use call the names of the strategy holders for the reason being I am not the owner of the strategy. I myself learned it and I'm trying to help people who also had the same mindset struggling to learn like me. And I think it's a great decision and it's a great idea to help people like me to also learn and not struggle like the way I struggled. So it will be bad of me not to call their names. So excuse me for that rather. So now let's go into the chart works and let me show you where that breakup block. So you can see how the market started making higher highs and higher lows. This is actually um, our NZD card trade that I actually analyzed, and I was saying we need a push down to the down, a push to the downside. So you can see from here after the market pushed, it broke. It barely broke because we are still inside equal lows, and I don't know if that will break into the downside. And yes, I have changed my candlestick colors, and I guess this looks nice than before. So I think I might stick to this for some time. So now, as you can see, after price maybe found an area of resistance, I think it reacted to this particular area here and made its way back to the upside. Okay, so you can see here it reacted and then it pushed all the way to the upside, bringing this strong um, momentum to the upside. So, and in every strong momentum, we want to see price returning back into the market. Okay, but in this case, so you can see that the breaker block is now found in the lower time frame of NZD card, which I think I should show you guys. I was analyzing this pair when I saw this. So this breaker block, it's not difficult to find. It's not difficult to spot. Now, when you look at it on the 15-minute time frame, you're not going to see this. You are never going to see this. But the question is, why did the market make a strong push to the downside and a pullback before breaking the structure? That is a question you ask yourself because you did expect the market to probably give this strong break to the downside, but the market didn't do that. It just kind of respected something else. Let's say it respected this doji and went back, respected an area here, and then started pushing to the downside. Now the question is, what made this move? And that is what we are going to figure out. So, what made this move is inside of the 15-minute time frame. So, a 15-minute time frame, you will see you see that the breaker block is hidden in a very in that strong momentum you can see on the 30 minutes sorry on the 15-minute time frame. Okay, so on the 5 minute time frame, it's that strong momentum that we can be able to so it is always had a strong momentum of the 15-minute time frame. And now when you navigate to the 5 minute time frame, that is how you'll be able to tell where the breaker block is. So now this is the breaker block right here. Okay, so this is the breaker block. Let's change it to blue for good experience. So, so like I see, the breaker block was respected nicely. So if you are to trade this, I got stop loss. Your entry can just be here if you want, or you can put it in the middle of that breaker block. Okay, and then your stop loss probably below the liquidity purge. Okay, and you can see from a local standpoint, this is where my stop loss would have been a 4 pick stop loss, and maybe I can take my if you don't want to miss any trade, maybe you can come and tap and leave. You can just leave your entry here to be on the safer side, and then you take your target all the way to the downside. Okay, so that is how you can take this type of entries. This type of entry doesn't need to see a very strong break of structure. The first break of structure on the 1 minute time frame is enough for you to take this type of entries. Okay, so you can see the market made an up move, a down move, then it made a strong up move. While coming back, it then came and broke structure from this standpoint. So now this becomes the breaker block on the 5 minute time frame. So targeting this is not a bad idea. But to me, my advice is if you want to target this, I think taking it from the last standpoint is very easy. Just take it from here. Okay, if you want to take a sniper entry, just take it from here. Yes, you might be missed sometimes by one or two pips. That is always mostly what happens to me. So this is how this you can take this. Obviously, I didn't take this trade because I wasn't watching the market as I then. What I'm actually watching is the big move that I am waiting to take. Okay, probably the swing trade next week to come, or maybe next 2 weeks that it might happen. So that is a breaker block for you guys. And this happens in the opposite way as well. And you can see the market moving to the downside and making a shift of structure. Then you just see it a little bit like this before coming down, breaking the previous low, coming down. Then don't expect the market to come and cover this whole down move. Just take your line, put it here, and wait for the market to tap into this, then explode back to the upside. So, guys, that is what I have for you about the breaker blocks. Hope you guys understand. If you don't understand anything, please feel free to comment below and let me explain it again. And I'll make another video explaining this once again for you guys. So stay tuned and see you in my next video.